Good morning. It's Thursday, September 7th, about 6 a.m. Central Time. So, overnight, the precious metals, they're weaker here after yesterday's continued sell off. You got gold unchanged, 1944. It's actually poking up a bit, up about a buck and a half, $2 right now, 1946. Now, you look at silver down 18 cents, 23.32. Copper down 4, 3.74. That would just make it a new low at the moment. And then platinum down 7 at 9.08. So, silver down 6 straight days after that failed breakout attempt. You had that long pull up, you had that pennant, and then you had that breakout, but there was no continuation above it. So also platinum 6 straight days down as well. Platinum's closing in on the 900-hour level. Avoid the October contract. There's just not enough time on there. Go to the January contract. Trades at about a $7 premium, so you'll have to see 1892 in order to get the January below that 900-hour level. And then I think that longer term, I think that platinum price will recover. So if you got an account that's appropriate with, we'll probably give you a call. Start to look to allocates to some of that. So really this direction on the precious metals has really been determined by US dollar strength, treasury yield strength, and then also you look at the data front runs what the Fed is going to do. So while a September rate hike is off the board here, I think it's a 93% chance that they'll leave rates unchanged. It's more of a pause. You start to look at some of the outside factors, some of the inflationary data here. You've got crude oil futures continuing to cycle higher. That's one part of the Fed's, what they watch here, like the core PCE data, things like that, CPI x food and energy. They do look at energy prices, and the way energy prices are pushing higher, it's pushing up those inflation expectations. So you look at the November Fed meeting through the Fed Watch tool that's put out by the CME, you'll see that there's a 50-50 shot that they do raise rates again. So this interest rate hiking cycle may not be over. It might just be a short pause. Now, a couple things that did happen here yesterday with that weakness in the precious metals markets. You have gold. It flipped from a neutral trend. It was never able to capture, go high enough. It really ran into that 200-day moving average a couple times, couldn't break through it whatsoever. And now you had that breakdown. I gave you the levels here where it would break to a bearish trend. So expect if you're long on the gold market, you're going to have to ride it out a bit longer as it shifted to a bearish trend. The trend neutralizer point is going to be about the 200-day moving average, 1978. Otherwise, it is short from 1944.20. These are kind of like the turtle trading systems. The trend following funds and everything else, they're going to flip to the short side. Now, they do have a slight red flag, and they should be cautionary because of the fact that gold is up just a bit here today. So they might wait for the 8:30 open before they start pressing the downside. Now, silver, that also has some problems because it went down 6 days in a row. It flipped from that quick bullish trend, which was a total red flag. I told you that. It failed on a breakout, and then it went down 6 straight days, and now it's broken to a neutral trend. So it's going to take, if it closes here below, this is the December contract at 23.41 or lower, if it closes there, the system will flip to a bearish trend. So expect some more weakness on the silver market. And I had been saying that, I wouldn't look at silver from alongside as any kind of viable asset class until it gets back down to the bottom, the belly of the recent cycle it's in. So if you don't know what I'm talking about, just pull up a daily chart on the silver market. You'll see that it has kind of gone back and forth like this, and that top end is 26 bucks, 25, 26 bucks, somewhere in there. The bottom end is this 22, 23, and it's cycling this $4 range. So we'll probably look to attack it more aggressively when we get to the bottom end of that range, and then add more to the positions as it starts to turn up. But we do need some economic data. We need something, some kind of catalyst. There's just not a catalyst to get silver going, despite what a lot of people think. You look at the outside markets right now, they're a bit weaker. You got crude oil kind of backing and filling down 55 cents, but it was up a buck yesterday. Natural gas slightly higher. That one's kind of interesting. Priced up some cheap November call spreads, about 50 days left, something like a 310, 340. They're running about $900. There is some stress on that grid in Texas, and last time we kind of saw that, there was a bit more demand for natural gas. There's also a lot of talk about improving the grid with copper and things like that. So, we got to keep an eye on those different markets. So you got the dollar index just below 105, 104.98 and a half was the high. We're trading 104.91 last, and U.S. equities are weaker all across the board. So you got any questions, give me a call, 312-858-7303. You want to trial on our research? We got a lot of good stuff, covers all the different commodity markets here. We all write actively in the morning, but you got any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck and good trading.